The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here after 3 hours of TFNN hosts. My pleasure to be in the fourth hour, 11 o'clock. So 9 to 10, 10 to 11, 11 to 12. No, 8 to 9, 9 to, yes. 8 to 9 is John Logan. 9 to 11 is Steve Rhodes. We've got me at 11 to 12 today, Tuesday. We've got Chad at noon with the options hour. Just fabulous program all the way through today till 6 o'clock. And I'm going to come right in and say the Dow is up at 17,620. The bull market continues. Only in leg B in the E-minis. I can't believe it. Made a peak deep with a kind of rectangle formation. The third one, the shortest one probably, unfolding between round number 2039. December contract, and the low so far today is at 2031. Nice narrow trading range, high level consolidation thus far. Now what's really important about this is that the MACD is just now, you can see those little vertical lines, little green lines. Let me see, can you make them out? Yeah, you can make them out. Those vertical green lines there, this is volume, the gray lines. This is the green lines, is the histogram. That is the distance, it is the makeup of the 9-period differential, which is made up of the 12 and 26 period moving averages, exponential moving average, made to give you a 9-period differential, and that shows you the distance basically between the green line and the red line right there, declining. In other words, getting a little bit narrower as we get to the top. You'd expect that. It's been a spectacular. This has been just a vertical rocket ship move to the top. And I got questions coming in. I'll do the questions. Got a bunch of questions I need to get to. So let's not waste any time. The Dow is up 8 at 17,621. The S&P is up 1 at 2,039. The comp index is up 46.53. It's up 1. The gold is down 6 at 11.54, trying its very best to turn around. It won't do that until the dollar. Let's go straight to the dollar. Let me show you the dollar DXY, the dollar index. Made a peak D, really good chance that we will fail to make a higher high above 86.19. Or if it is a higher high, it's just nominal. That makes the 120-minute chart right there. This is an A and a B. It might just make an arch formation there. The lowercase h pattern that I always talk about start to come down. If it breaks 87.85 right now, if it breaks 87.40 between now and tomorrow morning, there's a good chance that gold will finally have a little bit of a bounce. And it could be quite a reflexive action. It had one already. But yeah, today's action so far is really negative. If, in fact, there's a lower low than today's low tomorrow in the gold contract, but if, perchance, gold is able to get above 1169.45 in the December contract, that's 1160. Wow, that's a lot higher, 15 points higher than where we are at 1153.70. That'll say, hey. This is a good action. We're about to try to make a turn, and that the 1201 9-period moving average in the weekly chart would then become a target. We're doing this step by step. For my subscribers, we've had some really nice trades, some terrific percentage gains. I did add a gold stock, and that gold stock right now, oh boy, it's up. I was going to say it's up 2 cents, but I don't think so. It is. Yes, it's up 2 cents. Good. Blah, blah, blah. Up 2 cents. Oh, whoa, up 3 cents right now. And that's really good action because we bought it on the sharp pullback yesterday, and then it went a little low, and it missed hitting the stop by a penny, I believe. But we have another instrument in the energy sector, which is not doing as well. So that's the only stock that's not, now I can say it's the only stock that is negative in our 7 stocks that we've got on the long side. Some have made fantastic gains, and one in particular we keep going in and out, in and out. So hopefully this is going to give us that leg C that's missing, and that'll be very positive. So back at the ranch, you got silver is down 13 cents at 15.53. High-grade copper is at 301. Oh, it's struggling at that 3 level. Crude oil is down again. It's at 77.27. Bonds are down 6/30 seconds at 140.25. The dollar is down 0.05 at 87.85. And all I can say is that I'd say that this is a very important week for a number of reasons. It could turn out by Friday to be a transition week as some sectors make their tops and then start to go down. We'll see if this is going to be the week. Normally, what I say is that once you get through October, it's pretty much clear sailing into the end of the year where you close close to at or close to the highs, the recovery, or in this case, it'll be all-time highs. All I can say is I'm making it really simple. A close below 17,000, a close below 17,000 in the Dow in the next 2 weeks or so is very negative action. Otherwise, this is and continues to be a remarkable market. And I had a question very early this morning in the den by Fletcher, and I want to go through that because it was a great question. If I can remember what the question was. I know it was a great question. The question was, there is no precedent in history to have rates at zero. I think we're really behaving in a way which is outside of historical norms, and that should make us nervous, is a quote. And then the question was, Basil, would you characterize this rally off the October low as unprecedented from a historical perspective? I'm going to go right to that question now because although it's a fresh question, I've got a couple left over from yesterday that I need to get back to. Let's see if I can find it right here. Yeah, I'm going to go to that right now. Look, I defy you. Let me just see. Can anyone see what that is? I haven't written in big bold letters. Yeah, maybe. Do your best not to look to see at the heading to see what this particular instrument is. If you look at this instrument and you look at this move from the low over there, and where I'm pointing my arrow, this is the black background, to that move over there, and that move went from October of 1 year to October of another year. Look at the pattern. You see the channel? And you see the channel that's unfolding here, right here? There's a tremendous match. You see the way you've got the squiggles in the stochastic? You see the way the MACD's going up? There's just one really big difference. And the difference is that the number of corrections that held this particular dashed line, the inside track, Chapman wave inside track support level, is many times more than in this particular chart, which kept going right back to the red line, the lower support level of the inside track of the up channel. That to me is incredibly important. Why? Because it's saying that the majority of trading has been within these two bands, the dashed line inside track Chapman wave upper border that says that at this particular point there's usually a reversal pattern, and the border on the up channel's lower trend line, rising trend line, that's the red line there. This really should be a green line. I don't want to mess around with too many colors. That red line says a break underneath would be very negative. But look, it's trapped between that red line. That's an incredibly narrow range. And look how many decent pullbacks there's been. One. And here there was one, took time and price. Here was a quick one, just price. And then smaller ones. So right there, if that was an ugly bar right there, but it closed very nicely back at the end of the month. This is a monthly chart. Now I'm going to tell you what it is. It is, in fact, the Dow. This is 2002, the low of 71.97. This is the October 2007 high of 14,198. An incredible move, a double, almost a double. And in this one, you've gone from 64.69 to the latest highs in the 17,000. This is 17,350. Wrong. The high thus far is 17,638. So you've got a much bigger percentage gain. But The patterns are the same. So now let me answer the question. The answer is, what is unprecedented? The unprecedented duration, the unprecedented fact that the bonds have had a 31, it's really a 28, but a 31-year bond rally, and the channel itself is about 28 years. And if you see that occurring, you say to yourself, hey, wait a minute, we've never seen anything like that before. So that's the unprecedented part. And as long as the Fed made it its objective to pump money into the environment, whether it's the air, the ocean, or anything you breathe, that green stuff went into the market, and that's really important. So the answer is, the extent and the duration is rather unusual, but not the patterns. And I go by patterns, and I think this pattern will fail just like every other pattern. The real question is, QE, yes, is peaked in the den. Yes, QE is distorting everything. So if this is a fractal of a particular pattern, then we should expect that the consequence will result in the same type of, I wouldn't say the pattern coming down, but the result will be that the buy signal to buy mode will come to an end with a sell signal. That's the best I can say. In the back of my mind, I have a whole bunch of things that I can extrapolate. I don't want to do that right now. We're looking at a chart, and the chart is a chart. Now let's go to something else. Hope I can find it. I did it just yesterday. Oh, boy. Yes, there it is. I added this, wherever it is. Will anybody see something that's highlighted here? Where did it go? Oh, no. That's interesting. Let me try it again. I added this yesterday. I'll say the same thing again. Right there, activate, and I don't see a single thing. Wow. All right. I added the NDX because there was a question on the end. Oh, that's also what I wanted to show. You see this chart pattern here? Pop, 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 and then it runs to the upside. Well, in percentage terms, going from this channel's low at about 84 to this high of 195 is an incredible move. It didn't take all that long. It went from 1934 to 1937. But if you want to talk chart patterns, it's the same channel. Look, this particular channel right here. Not from there, but from here. Same thing, chart pattern. So chart patterns repeat. It remains within this tube, going from the lower part of the tube to the upper part of the tube, and it can either be ascending or descending. This is 1932 with the Chapman wave, with the right shoulder failure, and with the run-up in 1938. I'll be back. Basil Chapman, Tiger Kitchen Sound, going to get you a bunch of other questions, and I would love to take your calls like that.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we just had a question in the den about the IBB. It's the NASDAQ iShares Biotech ETF. Yes, I do expect that we're going to get to a leg C, and that would be above 302.98. What's really important about this is that if we do guess the 302.99 for leg C, how high it goes is going to be the determinant on a number of factors. It's going to be influential on the Qs. It's going to be influential on the whole biotech sector. It's going to be influential on the S&P and other areas. Why? Because they've been the IBB has really been a leader. The IYT, which is the Transportation Index, as well as the IBB. The 120-minute chart says it's going to be a bit of a struggle. I've got a potential squash pattern in the technicals to say there should be a move up at least towards the 300 area, but it's how does it get to 302.98? That's kind of far. Normally it wouldn't be, but after the retracement from 302, from this quarter 303 down to 286, 287, that was a pretty deep pullback, and it took time, and that means you're taking time instead of the 1 to 3 bars of a consolidation in the bull phase, but you've got a bunch of just a handful of absolutely fantastic biotech stocks that are showing determination to try to get to their recent highs or to go higher, and that's the one thing. The other is you've got a beautiful up channel that's been maintained, that has been maintained in the IBB. I didn't want to crowd it out, but basically this green line right here, that's what it needs to get through this week, and that would take it to the 303 area. And if that's the case, then we can then the whole area between 303 and 312 is going to be the very strong resistance that is like a magnet as well as a repellent area. So I just wanted to go through that because there was a question. The XLF was a question. I haven't quite finished my other. I'll go back there. But the XLF, I want you to talk, because I want always to be constructive, to be able to be informative to the extent that it's like a lesson. I want to talk about channels because I spoke about the bonds. I spoke about the channel of the Dow. I spoke about the channel that we just saw. Now you've got a channel. Look at this beautiful move. There has just been no retracement. This has been a rocket ship move in the XLF, even though the price has only gone from 21.55 to 24.20. I should also mention, so I've been long the IBB, an ETF that's related to the IBB. We're along the XLF. This is leg B. But you've got, and this is going to be really interesting, you've got the Dow in leg C. So you've got the E-minis, the S&P E-minis, you've got the XLF, you've got the IBB, all at B's, either leg B or at peak B, and here you are with the S&P and the Dow in leg C. I think that the S&P today squeaked to a new high. So all the stuff that I spoke with John about in terms of looking at what levels in the weekly, etc., is saying that this weekly chart has every indication of a start of a move that goes into very early January. Then you got to watch out. But I'm being absolutely clear about this. A close in the S&P below 1984, somewhere around there. I'll define it as we move along. Says you've broken the up channel support. Be really careful. But up until then, things are good. Now I have an indication that says we're getting really close to at least an 8% pullback in some of the sectors. So we'll talk about that as we move on. But you've got the S&P as well as the Dow in the 1-to-1 falling X expansion, and that for the S&P would be at 2054. So I'm covering up a couple of things, and these are the questions that I got. So the XLF is still very positive. So don't think of shorting the XLF, the S&P Select Financial Spider Trust. Don't do that, not yet. Look at Goldman Sachs. Goldman Sachs is in leg C. Beautiful technicals. The weekly chart says, yeah, I'm getting a bit extended, but I haven't given you any indications yet. That's going to come from the daily chart. And the monthly chart is also in leg F, and that's the same thing. The 120-minute chart says, yeah, it's getting a little tiring over here. It's hard to keep leading the pack. So that's the XLF. The next thing was so I did the NDX. That's where I wanted to go back to. Lost it. The NDX. So this is what I want you to show. There is no correlation whatsoever. I mean, it is about as distant a correlation that you could ever wish for in the NASDAQ and any other chart that we've seen historically at this particular time, or looking at, I should say. Why? Look at the parabolic move, number one, going to the March 2000 high of 48.16. That's number one. This is the NASDAQ 100 index. Number two, look at the MACD, the way it just screamed, that yellow line, that's the fast-moving average, screamed to the upside. Look at the way the on-balance volume even went to exact high before it turned around. So look at that pattern and look at what we have now. There is no relationship whatsoever other than it's been a very beautiful move to the upside. I'll be right back. Basil Chapman, Tiger Initials, our 2013.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So question on the 30-year bond, question on, wow, another one was over here, and I just want to set it up so that I can remember where it is and what it was. A really good question was, and I'll get to it in a moment. Oh, come find it. Where is it? Oh, I had enough. I've got to write it down. I'll be back with that. Oh, there it is. Great. Yes, that's a good question. But we're going to go to our first caller. We've got Brenton Martinez. Brent, how are you?
I'm doing well, Basil. How are you today?
I'm good, thank you.
I was calling about Tesla. You still there?
Yes. Do you have a position, or you're looking at it?
It looked like it was trying to fill that gap that took place back in October.
Okay. So, folks, we're looking at Tesla trading at $247.95, up almost $6. In October on the 9th, it plunged it closed, no, it didn't plunge that day. It closed down at 257.01, having hit 265. But the next day, it plunged, and it opened at 244, and it went all the way down to 235. It constantly fell after that, and then it hit the 200-period exponential moving average. I keep mentioning how important certain levels are. You don't even have to care about them until you get in close. It's like a gap, and Brent has spoken about a gap, so now the gap becomes important. It wasn't important when we hit the 200-period moving average. That was important. That's that pinky line right over there. At the price went to 217.32. Wow, that's an 80-point. It's nearly an 80-point decline. It's one of the deepest declines it's had in quite a while, Tesla. And then what happens is it starts working its way, going peak A, peak B, peak C, peak D, pulls back, holds the 9-period moving average, goes to an E. That's where it looks like it's going to fall, and it does fall, but not very deeply. It only goes from 247.56 with a round number open of 243, then it goes down to 228, and then it starts to rally again. Now it's made a new recovery high, but the gap itself has a low of 254.40 and a high of 245.89. So that 9-point gap is really what we have to focus on. So the question really, I can tell by the tone of your voice, Brent, you're looking to maybe short it if it gets back into the gap. Is that correct?
You read my mind, Basil.
Oh, I read the chart and I read your mind. Okay. So now look what happens. I'm going to show this chart in Tiger TV. I hope you can see it. What it has is it's got a beautiful up channel. It's the pattern that I call the H, the lowercase h, that turns into a lowercase m pattern. But it's a rising one, so it's making higher highs and higher lows. Not that much higher in each case, but higher nevertheless. Why? Because it's steadily trying to get back to that area that I spoke about before, that 9-point gap between the 245 area and the 254 area. So this is the 256, area. So what I'm looking at here is this is peak C in the 120-minute chart. It's shown very steadily that it goes to peak A, B, C, D, pulls back sharply, starts a brand new buy mode that goes to peak A, B, C, and now we would expect that within the rhythm of this particular pattern, I would say that by, today's Tuesday, by Wednesday, at about 1 o'clock in the afternoon, if the pattern repeats, and it's going to be tough because I see the market pulling back today, I think we're going to have a slightly down close, and that's going to make it Wednesday very important because I think Wednesday creates leg C going to peak C in many of the indices and B in some of the others. My thinking here is that I'm not sure it's going to get to a D, and if it does, it'll just squeak there, and 252.80 would be the resistance level. So here's my thinking. Until I would have a little patience, until I'm getting my peak at no, I'm sorry. I think it will be peak D in the Dow and peak D in the S&P because the QQQ series has been reminded. I've been reminded by a number of people, although I'd already done the work, has in fact made a peak C, and the QQQ series has gone to a C, and today it's in leg D. So that says there's a good chance that the Qs and other indices that have gone to leg Ds will probably go to an E and an F to have this all correspond. So I'm going to make the suggestion that says, yes, you might miss a turn on Tesla because within the next few days, between now and the time that the market makes its highs, and now it seems to be extending. It might not be this week. It might, because today we've already got another leg C to the upside. So it might even extend into maybe Friday or next Monday or Tuesday that we start to see signs of a top, short-term top. So I'm going to recommend that you might miss a chance to get into Tesla. This is the only way that I would be playing it right now. Holding the 9 period in the monthly chart has been the boon for Tesla. It just managed to save the day each time it got there. Now I think it's getting tired, but it hasn't given a signal in the monthly. That has to come from the daily. which it has to go to the weekly, which it has, but the next phase of the down move in Tesla, which I believe should happen, is going to be critical because it could happen very suddenly on some kind of news. So here's my thinking. At 247.77, I would prefer, I would have preferred to say, if you called earlier and it was at 250, I'd say, you know what, at 250, if you wanted to start either an option or a put option or a small starter position on shorting Tesla, I'd say, okay, this is a good time to do it, but you've got to realize that at 250, you want about a 5 to a 7-point buy stop. And that's just the first very small position. Now, I don't know if I want to stretch that out to an 11, 12. That's just too much as far as I'm concerned, even though it's only 5% and a very small position. So I'm going to make the recommendation, have a little patience. I think you're going to get an opportunity to start a short position with Tesla not filling the gap, but stalling between 250 and 253, making the arch formation, and that's going to be the most important leg A in the weekly chart, because if this leg A fails, you should very quickly, within 3 weeks, you should be testing the 217.32 level in Tesla. So I'm completely wrong, because I would say to you, if you get in that 250 to 253, 252 area, I would still have only a 4 to a 5-point buy stop. Why? Because if this thing climbs almost to the low of 265.54, the low that was made on October the 9th before the gap down, that says, hey, this thing still has residual strength based on the monthly chart. Don't mess with it. You have to wait for some other technique to formulate to be able to get the short. So nothing right now. Have a little patience over 3 points. I'd have the patience for the 3 points. Let's see if over the next few days the market has the pullback. Then you start leg D. And when we get to D in the Dow and the S&P, we'll have to ascertain whether or not you're going to get in the in some of the indices that are still in leg B, whether they're going to fail at C or they still have to go to D's. That's going to be even extra time and price, and that could take us to next week. So I'm not going to be in a hurry. I've got one particular short in my newsletter that we're hoping to implement. We haven't been able to get it yet. But if we do, even there, I'll be putting a fairly tight stop, even though the stock's acting very weak. So that's my recommendation. I also need to say, if you were looking at buying it, I would be doing the opposite. I'd wait for 243 to 245 to be hit. If it's showing support and the market is showing strength and the market looks like it wants to go to those extra legs up, Tesla could give you that 7 to 10 points to the upside, and then I'd be very careful. So because it's such an expensive stock in price, 247, I'd prefer not to mess around. Rather have a little bit of patience. Let's see what happens. If it tries to rally, what happens in that 250 to 253-ish area. So I hope that helps you, Brent.
No, I absolutely agree. I just I like to look ahead a little bit when I'm watching stuff to again, look at targets like you're talking about. So if it gets up to that level, that's where I'll start considering, starting some put positions on it. So.
And one of the reasons why I'm suggesting it is that the stochastic and the MACD in the weekly chart strongly suggest at this particular point that there's not that much left of a rally in Tesla before it comes back to retest the 220s. Now, I'll be completely wrong if by what's today, Tuesday? By Friday or Monday, the MACD in the weekly chart has actually crossed positive. To cross positive, Tesla would be in the 263 to 265 area. So I hope that helps you.
Oh, it absolutely does, Basil. You have a great day. I always appreciate your help, and I'll plan on talking to you soon.
Thank you very much for calling, and good eye. We'll watch this together. So, folks, let's do this. Thank you. Take care. I had a question on UEC. This is very interesting. The question came in as it was rallying. UEC is this tiny price stock, uranium, energy core, trading at $1.85, is down 6 cents. The question came in. I actually saw it a little later, sort of at the end of the day, and it already hit 1.72. And I sent the email saying, I think, The email didn't go out until the next day, but basically I was going to say, if you're not in it, I wouldn't chase it because I think it's going to pop today. That would be the following day. It was yesterday. And therefore you have to wait because it'll be leg C. You have to wait for a pullback to see if you want to trade the leg D. Because it has this rhythm of the cyclicality of having arch and cup formations and H formations, I would wait for the cyclicality to play out, and I would play this move right now. If you were in it, I said I would keep your position, and I made a couple of recommendations. But I also said I'm very sure that based on my 120-minute chart, which I didn't finish notating, I think there should be a pullback to give you a peak C, and that says that this is A, B, so it's a peak B in the 120-minute chart, high-level consolidation, held the 9-period moving average, everything about the stock. And the question was, the stock is UEC. There has been an announcement about Japanese nuclear reactors going back online, and this has sent uranium stocks to spike higher dramatically. Yes, absolutely. So now what I'm looking at is if you want to, very dangerous, if you don't play this kind of thing of $1 and $2 stocks, I'd say just be really careful. Just set aside, watch it, and say, oh, I could have bought this at whatever. I would avoid doing anything with it now. But if you're used to this kind of thing, I think nibbling here at 183, knowing that it could pull back to 168, that's a big percentage move. But you're only going to take a little tiny. This is like saying, you know what, this is the, I never like to use the word play money because no money's there to be played with. You've got to think seriously about it. But it is the fun money, let's say. In that fun money, if you want to take 1,000 shares or something, knowing that you could lose 500 chips like an option, even quicker than an option. But at the same time, this is the first decent move that says this is the real leg A to the upside in the monthly chart. You've already used up a ton of time and price coming down, and that the weekly chart has had a big spike, and this spike could have one decent single leg move. And what I had said is that I didn't know at the time that it would go there. I said the 183, I think, area would be the next 183 to 192 kind of area. But the thing is this. It stopped dead at $2. These round numbers are really important, especially with low-price stocks. Somebody must have sold or got a big thing who just said, get me out at 2. Boom, nice, easy number. You don't have to think 2 or 1 or 199. 2, bam. And now it's pulled back, and it's got high-level consolidation. The weekly looks quite okay. The daily looks terrific at 91% of the stochastic. And the 120-minute chart looks pretty decent. So I'm technically. So I'm suspecting that it could pull back a little bit. There's a chance that the low today at 177 is the low before it goes to D. Once it gets to D, so if we're going to nibble at it right here, what I'd said is if you wanted to add a little bit, you have to wait for a pullback, and then that's the trading position because he was in much lower down. And that trading position says the moment you take out the high of today, that was yesterday, I didn't know what it would be, of $2 in this case, you raise the stop on your trading position, and you're right, you have to be watching this all the time. So you push, and you try to get as much as you can, because the moment it goes to 201, you raise your stop to 193. As soon as it goes to 205, you raise your stop to 198. You just have a trading stop on that position. That position, you grab whatever you can the moment it hits a level and then starts to resist going higher and then starts to pull back. And then you've got your core position. Now you're in D. That's really, if it's today, that's great. But if it's tomorrow, that's leg D. And now you've got to be somewhat careful. So that means that the next time you do it, you take some of your profits. You don't go with the whole chunk in. You take some of your profits and you find out where there's a high-level consolidation. Why? Because 221, the 200-period exponential moving average, will become the focus the moment this thing can get to 206, 208. Why? Because in the twos, it starts to say, I want to look for more friends in the twos. 221 is the magnet level that's not even been hit once since it broke down right there, back in April of 2012. It broke under 317, having hit 398. So that's the way I would trade it. And then if it starts to break down, and goes below 130, you want out. You don't want.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So we're back. Now, this is the question that I had a whole bunch. I just want to get through them. I'll go one at a time. Bonds. The very long-term chart has made leg D. Oh, come on. U.S. Okay. Has made a leg D. Really good chance that it makes a peak D without any new high this month. And that says that this whole area, it should be a containment area. But this is one of the smallest moves we've had to the upside in the quickest amount of time. And I'm watching it real closely to all-time highs. This is like a little coda to the whole thing. But it doesn't mean to say it's all over for bonds. It does mean to say we've got to watch this real closely. That's number one. So I'm going to do more on bonds. So the answer to the question is, I think that yields are going to be in a little trading range, but at some point we've started to get to the point where yields could go higher. I'm just not sure yet whether it's really higher or whether it just starts to make slightly higher peaks in the bond yields. So I'll do that more tomorrow. Meantime, back at the ranch, I wanted to finish this up. I want you to say, here's the S&P. Whoa, where did it go to? Here's the S&P, SPX.X monthly. Look at that beautiful black line. Look at the way you've gone, and you've gone to that 1-to-1 to the upside. So we're getting close to some of the daily chart. We're really close to strong resistance. Now, I'm anticipating that there's a chance. Do you see this parabolic move in the NASDAQ from the 1999 to the first quarter of 2000? I'm suspecting that I've got to be aware that that's a possibility here. And it only becomes a possibility if at some point, without a 8% to 14% correction in the next month, if there's a move that takes the Dow above 18,600, that's 1,000 points. It's really not very much. 1,000 points. This is 8% or something. Okay. Now I've got to double check. This is why is this in? This is the monthly chart of the Dow is in E, and the monthly chart of the S&P I believe is in D. I'll get back to that. Now I had a question. I think it's a great question. The question is, will I look at? Well, the question had to do with the VIX. I'm not looking at the VIX now until later in the week. Early next week, so I don't want to do anything with that. I had a question about some other things. Let me just see if I've got a moment here. YY, just let me have a glance at YY. Yeah, I'm ABCD. This made a peak D. I'm a little concerned about stocks like YY. I think there's limited upside. I don't even remember what YY is. YY is YY and great. That tells me a lot. So let's leave that. I'll try to send you back an email there. Now, the other question that was really important was, okay, okay, here we go. This is INDU. This is from my trader. This is my daily opening call. Remember, this is what I do every single day. If I can find it, let me move this away. Oh, I wanted to show this. Here's the up channels. Beautiful, beautiful drawing of the. This should be in an art gallery. It looks fabulous. Anyway, it just happens to be the Dow, and why have I got it in D here in the month? Oh, the S&P. This is the S&P. Look at the beautiful up and down channels that never broke, and when they did broke, they broke because there was a major turn. But look at the upside taken out there. So there's that parabolic move. That's the reason why I have to watch this really closely and see how how the whole resolution of any sell signal I get in the daily chart affects and effects the weekly charts. It's so important. It's absolutely imperative that I keep a really good focus with the back of my mind saying, wow, if we go into the acceleration phase, just like I'm starting to read about these incredible houses, incredible prices, artworks today. What was it? Who sold Rothko? 75 million, 54 million, a million for a piece of artwork. If these are not Van Goghs or anything, these are just flat paintings. It's an incredible feat that people have that kind of money. I'm going to be talking more about it because if we go into the acceleration phase now, we could rally into March and then watch it out. I thought I'd leave you with that. Meantime, back at the ranch, my opening call, check it out. Some nice moves we've had in our stocks. Go to the front page 2 weeks straight, and I'll be back with Tom later today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.